Hey everyone, it is Julie here with Tip Ranks. In today's video, we're taking a look at two stocks that solid insider buying has put in focus. Now, of course, insider trading always sounds like a bad thing, but basically it's any time that a president, VP, or board or higher up executive makes a purchase into a company that they run. But when they do this, they do need to trade those shares publicly so that investors can see what they're doing. And when you think about it, they not only are looking to make money for themselves, but have a responsibility to make money for their company. So it can be a helpful thing to follow along with and read some hints where we see some big insider buys. So today we're focusing on two companies that have recently had some sizable insider buys and seeing what Wall Street says about the company too. On that note, the first company that we're taking a look at is Fortress Transportation and Infrastructure. Trading under the ticker FTAI, they're currently priced at about $28 per share. You'll notice that they do also pay a dividend with a current yield of 4.71%. On the TipRank Smart Score, they score a 9 out of 10 with a strong by analyst ratings, bullish blogger opinions, and on the right here you can see an increase in insider activity. Taking a closer look at that inside activity, we can see a recent purchase from Martin Tushman, who is on their board of directors. Now, he made a buy 5 days ago in the tune of $20 million. So a fairly notable purchase there. Now, the other neat thing on TipRanks is that you can see their past purchases and how successful they've been, which you may have noticed leads to that star ranking beside his name. And looking at Martin's profile here, you can see that 85% of his transactions on the stock have been successful, or 11 out of 13. His average profit on the stock has been over 20%. Now, taking a look at what Fortress Transportation and Infrastructure does, they own and acquire high-quality infrastructure and equipment that is essential for the transportation of goods and people globally. FTAI currently invests across 4 market sectors: aviation, energy, intermodal transport, and rail. FTAI targets assets that, on a combined basis, generate strong and stable cash flows with the potential for earnings growth and asset appreciation. They combine income and growth through a mix of equipment and infrastructure. Their two primary business units are equipment leasing, where they own and lease 264 different aircrafts and engines. Their Q4 2020 annualized adjusted EBITDA was over $221 million. They also have their infrastructure, with Jefferson Terminal, Rapano Port and Rail Terminal, and the Long Ridge Energy Terminal. They own 80% of the Jefferson Energy Company, which is a multi-modal crude oil and refined products terminal in Beaumont, Texas, that includes rail, truck, ship, storage, and pipeline infrastructure. They own 50.1% of the Long Ridge Energy Terminal. It has 3 primary lines of business that are operational or in development, which includes power generation, natural gas liquid storage, and transloading and frac sand transloading. And the Rapano Port and Rail Terminal, which is currently storing and handling butane for the domestic market at the terminal and is developing state-of-the-art natural gas liquids export facility to serve European off-takers, a market that has shown tremendous growth over the past decade. Their partnerships and programs include a perpetual agreement with Chromalloy, who is a leader in engine hot section PMAs, a 7-year term with Lockheed Martin, who is a leader in aerospace manufacturing, and a 7-year term with AAR, who is one of the largest aftermarket parts providers. Taking a look at what Wall Street has to say, we have Randy Binner from B. Riley Financial. He says that FTAI currently trades at 2.3 times BV and a 4.5% dividend yield, which we believe continues to be attractive in a low-rate environment. To the extent the company can execute on strategies to build greater market share in the aircraft engine maintenance area, there is potential for significant multiple expansion if the market views the company more as a differentiated aviation company play in our view. Higher operating results could support a dividend increase as well. The Fortress Transportation stock does come in as a strong buy, based on 7 current analyst ratings. The average price target is $32 per share, which would be just shy of a 15% potential upside. The most recent rating coming from Randy at B. Riley Financial, with a $37 price target for nearly 32% potential growth. For the second company, we're taking a look at Advantage Solutions. They trade under the ticker ADV and are currently priced at $11.72 per share. Jumping right to the insider activity for Advantage Solutions, we don't have quite a big a purchase for this one as we did the previous, but still a couple notable buys. Coming from director James Kiltz, who made a purchase of about $700,000, as well as Tanya Domier, who is CEO and director, who purchased about $300,000 worth of shares. Advantage Solutions is a business solutions company that is committed to driving growth for consumer goods manufacturers and retailers through winning insights and execution. Advantage's data and technology-enabled omni-channel solutions help brands and retailers across a broad range of channels drive consumer demand, increase sales, and achieve operating efficiencies. Their solutions include their sales agency, helping make brands more available, visible, and compelling to consumers, along with their marketing agency, plus a digital commerce agency, helping clients navigate and win in the evolving omnichannel landscape, their retail agency, helping retail services maximize the potential of private brands, in-store events, and retailer-led merchandising strategies, their international partnerships, as well as business services. For the fiscal year of 2020, they met or exceeded all of their previously communicated outlook, and they're expecting a better fiscal year 2021 and are raising their adjusted EBITDA outlook from $515 million up to $515 to $525 million. Now, there is currently just one Wall Street analyst covering this stock, and that is Ashish Sabadra from Deutsche Bank. And he says that trends in the marketing segment are improving as the number of in-store sampling events has bounced back, with January reaching 135,000 events versus the lows of 20,000 seen last April. ADV is also a significant player in the $800 billion US e-commerce market, where it generates $500 million of business, growing double digits in the medium term as the overall e-commerce market expands. We believe ADV remains well positioned to benefit from the reopening of the economy as revenue growth likely accelerates in the second half of 2021 and into 2022 with the return of experiential marketing. Like I said, he is the only analyst with current coverage on the ADV stock, and if you didn't guess it, his rating does come in as a buy. He sets this price target at $14 per share, which would be just shy of a 20% potential upside. So there are two stocks that have seen insider activity lately and also have buy ratings from analysts with some nice upside potential there. Let me know your thoughts on these two stocks or what other ones you've come across using the insider activity tool on TipRanks. I always love hearing from you guys, so make sure to put your thoughts in the comments down below. Don't forget to check out our daily pre-market update, giving you up to speed with everything you need to know before the market opens here on the TipRanks YouTube channel. Thank you guys so much for watching, and we will see you back here next time.